Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. In recent months, we've seen a significant shift in international trade dynamics as U.S. President Donald Trump has implemented and announced a series of tariffs on U.S. imports, including steel and aluminum. In response, Canada has imposed counter-tariffs on U.S. goods worth $20 billion so far. These tariffs and counter-tariffs have disrupted global commodity markets, causing plunges in the stock market as uncertainties around U.S. trade continue. In this special edition of CEO Insights, we are unpacking the impact of this U.S.-led tariffs and trade wars on the mining sector. Our guests on the panel will provide their insights on the sector as the sector faces these unprecedented challenges. Let's meet our panel. First, we have Rana Vig, CEO of Blue Lagoon Resources. Then Robin Goad is the president and CEO of Fortune Minerals. And finally, we have Killian Charles, president and CEO of Brunswick Exploration. Welcome, everyone.
Hi. Thank you for having us.
Thanks for having us.
Thank you.
Yeah, it's great to have you. So let's first talk about the impact of these tariffs on your respective operations, the challenges and opportunities. Can you talk about how you anticipate the effects of these tariffs on the cost structures of your companies, on junior exploration companies, such as equipment imports, project timelines, and how are they influencing your investment decisions and your exploration budgets? Maybe let's start with Rana.
Sure. Well, I can tell you that it's hit us immediately. As early as yesterday, I was just speaking to one of our staff we're just about to import something from the Florida area. Blue Lagoon just received its mining permit last month. We're only one of 9 companies in the last decade. That's a whole different topic that just that's been granted a mining permit, and we're just about to import something from the States, and 25% were hit right away. So that was a very significant cost structure. So wasn't in our budget, so we had to just kind of maneuver around it. But the reality is, we have to maneuver around it. We have no choice. We need the equipment. We have to get it here. We try to source it out here within Canada, but unfortunately, there are certain things that you just can't. You have to bring it in from the States. So, I think it's like everybody else. We have to buckle up here and brace ourselves and just deal with it.
And Robin, I think you're kind of almost in the same situation as Rana, as you also in your NICO project prepare to move towards production. Can you talk about that as well, and how has that affect your project timelines and your planning?
Yeah, sure. So our project is vertically integrated. It consists of a planned mine and concentrator up in the Northwest Territories and a hydrometallurgical facility, which we would build in Alberta. We're probably looking at something in the order of about $200 million worth of U.S. sourced equipment. So when it comes to construction, that would be fairly significant if there were paying additional tariffs on the equipment and also on our operating costs when in production. So we're completing a round of work that is being supported actually by the U.S. government and by the Canadian government. We have Defense Production Act contribution funding, as well as Natural Resources Canada. So I actually believe that these tariffs will be resolved before we start constructing the mine, just because they're mutually destructive. They're inflationary. I don't believe they make economic sense in the longer term. So it's part of an agenda that we're probably going to find out over the next few days. In the nearer term, it causes uncertainty in the capital markets, and we're already dealing with weak capital markets with 4 junior resource companies. So more uncertainty is a challenge, but that's as Rana mentioned. I mean, we have to deal with it. It's macro, and where the chips fall, we have to play along. But I do believe in the longer term, these will not be around.
Yeah, interesting. That I think that's what a lot of the people that I spoke with, looking at this, and I guess the track record of the U.S. president is just that, like it changes every day. So, Killian, I want to get your thoughts on from the exploration side of things. You kind of, it's interesting because you have a projects both in Greenland and Canada, and two countries who share one thing in common. Can you talk about what your experiences has been after this?
Yeah, no, I always laugh as I'm just missing a deposit in Panama. Then I've got the trifecta completed here. Look, at the end of the day, our view is, the trend for this year is going to be deglobalization, and probably going forward. And that's something that we wanted to take advantage. It's one of the reasons why we went to Greenland initially. It was not really from an American perspective, but was really from a European angle. We started to think about, okay, well, if these deglobalization trends continue to take effect, how are nations, how are sort of superpowers going to supply themselves in the raw commodities that are necessary? So to piggyback on Robin's point, at the end of the day, tariffs between Canada and the US, I think doesn't need to be said of how ridiculous they end up being, because both our economies, as well from a critical mineral perspective, we're intertwined. Right? We are reliant on each other. And so that's why we took the view that, assets in Quebec and Canada have a logical place in the US economy. And so that's why we went to Greenland. On the flip side, we said, well, Europe may not have access to Canada's material if it's going straight into the US. Why not look at other countries around there? As it relates specifically for us in the tariffs, I mean, unless you are in the unfortunate position of Blue Lagoon, where you are now actually buying material, for us, we're not really seeing a huge impact in terms of our cost structure for exploration. It remains predominantly at the local level. I'm not expecting a dramatic change, although there might be some cost creep when it comes to drilling. But, considering that our staff is going to be local as well, it should forcibly stay the same going forward. So it's only as you sort of move down the development pipeline do these tariffs become more problematic. And so for the most of the junior market, yes, it's a risk. Yes, it's another headache that you have to consider. But on the exploration side, I think you can more or less arm wave it to a certain extent as these things play out over, to be quite honest, decades, right?
And as you've alluded, Rana, you've I guess covered this in your first answer. But can you maybe talk about like how has that affected in you, like in terms of has it impacted where you're putting your investments as you build your mine, or the cost the cost structures of acquiring materials as you build your mine? Like talk about that dynamic for you.
No, I think what's happened is that it forces you to look at other options, right? People tend to do what they're just used to, right? They just go to the typical suppliers. This, I think, what's doing is forcing us to look deeper at other options, and as rightly so, to be honest with you. I mean, as an entrepreneur, I mean, that's what you really should be doing at all the time. But I think that people are creatures of habit. So there's not unfortunately, sometimes there's not a lot of options, right? So when you get into a production scenario, as we're about to get, there's just very specific things that you need, and you have no choice but sometimes to go to a source like the United States, where some of these things, many of these things are built. But it's you try to source as local as much as you can, but at the end, sometimes you just can't. So you just have to do the best you can, because that's the cards that we're being dealt with, currently.
Another, I think one of the biggest impacts of these tariffs is not just producers, but also like downstream in the supply chain. There's a big. I think this is why this tariff trade war is really concerning and surprising at the same time, is because the US and Canada have these deep relations when it comes to mineral trade between these two countries. Like in 2023, according to the Columbia University's Center for Global Energy Policy, Canada minerals export to the U.S. amounted to 38 billion, or two-thirds of its total exports. And in the U.S. is 28 billion to Canada, which is 25% of its total mineral exports. Then anybody can join, I guess can jump into this question. Like, how are you preparing for potential supply chain bottlenecks caused by these tariffs?
Business moves on, the world moves on, these things still happen. But you sort of, hit the nail right at the start there in terms of downstream processing. I think a lot of it is the message got lost. At the start, when it came to, let's say, lithium, or in the case of Robin with the Nico project, it was about breaking China's dominance in certain commodities, right? That was the original impetus to, say, the Infrastructure Act in the US and a lot of the policies that Canada enacted in lockstep with the US. And as we sort of progress through these things, we're sort of losing sight of, trying to repatriate sort of this downstream processing into the West. That's why we're trying to build all these lithium battery plants all over, trying to bring back refining. And, now we're left in a situation where that message is completely lost, to be quite honest. Right now, it's every sort of area for itself. Everyone's trying to scramble to build their own, sort of resilient economy. Some places it makes sense, and some other areas it does not make sense. Like Canada can never and will never have a complete downstream industry because, to be quite honest, we're going to have to export all of our material. Even if we were to produce lithium batteries here and mine the lithium, raw lithium material, process it, produce the battery, it's still going to go feed a separate market, be it the US, Europe, or somewhere else. So I think that's the main issue, is that, when we're looking at some of these policies, if they were logically applied with allies, they would make sense if there was an end objective. I think the reason why we're all having this conversation is that we cannot see what the end objective is outside of supposed remanufacturing in the US. But, we're all losing sight of what the real conversation is.
I might just add, I agree wholeheartedly with what Killian has said. We're in the critical minerals industry, so we have our project's going to produce 3 critical minerals, which is cobalt, bismuth, and copper. We also have 1 million ounces of gold, which mitigates some of the volatility we'll have in critical minerals pricing. But the whole sort of issue around critical minerals and the traditional definition are minerals that are essential to new technologies, defense, and also the energy transition. And people forget that that actually started under the first Trump administration. There was a lot of concern over the supply chains and decoupling from China, and we are seeing the impact of what China is doing on 8 critical minerals right now. There was the initial germanium, gallium, antimony. Just a few weeks ago, China withheld put export restrictions on 5 metals, which were bismuth, tungsten, indium. It doesn't matter what they all are, but bismuth, we have 12% of the global reserves. And you've seen the price go from $6 at the end of 2024 to $37 today. The whole purpose of the Canada-U.S. collaboration on critical mineral supply was decoupling and improving the resilience of our supply chain for certain critical minerals, all critical minerals, quite frankly. And so I think that's going to get. I don't see any sort of impact on critical minerals specifically. They say, well, the penalty or the tariff will only be 10% on critical minerals and petroleum. I'd be surprised if there's any tariffs on critical minerals at all.
But having said that, don't forget the positive side of it, right? We're talking about all the negatives here, but the positive side of this also is the prices that Robin that you just mentioned was happening. That's sure to bring in capital, to our companies, and of course gold, right, is seeing record. I mean, we're thrilled to be in production right now, right? I hope it stays there for a while, and even if it retracts a little bit, we're going to be laughing all the way to the bank. So I think there are some positive things for the sector. To be able to attract some funding for the companies that we all run.
Yeah, and you sort of hit that on the nail when you were making your previous point there, Rana. Like at the end of the day, we are creatures of habit, and when we look at the critical mineral industry and we look at the mining industry actually as a whole, we are creatures of habit in that sense, right? Why did China develop rare earth, a rare earth industry better than anyone else? Because we got kind of used to supplying ourselves with cheap, readily available rare earth outside of China. And now that we want to repatriate some of these things, we are going to be naturally looking at differential pricing. And, some of these tariffs are causing differential pricing. We're seeing in the copper space, we're seeing it bismuth, we're seeing all these different commodities where, a lot of new capital coming into the space says to itself, okay, it's not just the price that matters. It's not just, the underlying commodity, but it's also where is it located, right? And that goes back to deglobalization being a massive trend going forward. There's no two ways around it that even certain assets that fundamentally had a hard time justifying themselves now, simply because where they're geographically located, there's a benefit to them. And pricing is going to have to match that. So, I think what we're seeing is incentive pricing for the West. And, at the end of the day, we all benefit from it, either through cash flow or through, new capital coming into our companies.
Also interesting that U.S. Exim Bank just put out a new program called the Critical Mineral Supply Initiative, a supply chain resilience initiative. And it's designed for projects that have offtake with the United States. You can actually match the level of funding that's available or debt financing from Exim Bank with the amount of offtake you have to the United States. So the U.S. is actually pursuing programs which are still very supportive for critical mineral supply coming from Canada, and there are many other projects that have been provided with DPA Title III funding as well.
Given the deep ties between the U.S. and Canada in terms of building this critical mineral supply chain between the two countries, is it realistic? Because if this continues, and as far as the general the Canadian government in general is concerned, it's already looking at other countries in Europe, like Prime Minister Carney has been to Europe and, potentially Asia. He's opening up the northern, potential northern ports in Canada. Is it realistic to, is that part of your planning to look at potentially other sources, not go beyond the U.S., given the deep ties with the U.S., but go beyond that? Is that part of something that in your purview where you're now looking at potentially other partners, whether it's offtake or supply partners outside of the U.S.? What are your thoughts on
that? Who are you asking?
Anybody can, I guess.
Well, I think you have to, and business is fluid, right? And that's most prevalent in today's environment. So I think you're always looking for other opportunities, and this is forcing all of us to look at other options. So I think to answer your questions, I think you have to be looking constantly to see, where can you get, better technology? Where can you get, cheaper technology? Where can you get added, added bonus at various places? So I think all of these things are just helping us perhaps look broad on a broader scale, at least from my perspective.
our company is very focused on customer-based financing. So we're going to produce, we have a hydrometallurgical facility. We're fully vertically integrated. So, for example, our cobalt supply would provide a North American alternative to mine production coming out of the Congo or the refinery production that's dominated by China. So anybody that wanted a North American vertically integrated supply chain should be excited about potentially getting some material from our project. So vertical integration is expensive. You're not only building a mine and a concentrator, but you're also building that downstream refinery. So our focus has been on strategic partnerships, and that would be a customer ideally. So I think the metals that are most vulnerable for disruption would be the cobalt and the bismuth that we'll produce, and we would probably have offtake related to whoever the customer is. We had wholly sort of bought into the concept that this would be a North American shorter and more resilient supply chain, but of course we have to look at potential partnerships from all over the world, including other Western democratic countries in Asia. Sorry, not Western, but democratic Asian partners or Europe. We'll that is how we expect to finance the project.
I think that's a good thing, right? I mean, we should all be looking. I think this is all making us look inward, and then we should all be looking at beyond what just our borders and beyond just the South.
Yep. No, absolutely. And like I think there's a lot of exploration side where people don't think about what the end stage is. The sense that they'll look at a commodity and they'll say, well, like, okay, well, I'll just go explore in this area for this particular commodity, and don't really realize how it integrates into the global economy, right? So that's why, as I said before, when we went to Greenland, it was looking from the perspective of integrating it into the global economy, specifically into Europe, right? So we, from the onset, try to think about exploration from that late stage or from a mineability perspective, and to figure out which market it's going to access. And so, a lot of companies sort of forget to do that work. Robin mentioned the same thing. It's like, well, look, this is going to be initially an asset for North America. And, as Rana says, things are going to change and you have to adapt to it. But, you still need to start off with that kernel of truth to it, right? So that's why we looked at North America. We started doing our exploration work there from a North American perspective, but moved to other countries specifically to access, their markets as well. And that's a strategy we're still, continuing to see just how far we can push, looking at different other countries. And again, thinking about, well, how do they sit into the global market as we continue to do deglobalization?
Yeah. I also should mention that our company has a process collaboration with Rio Tinto that is taking waste streams from the Kennecott smelter in Utah, and we'll do the downstream processing to value-added materials at our Alberta refinery. So that is very much focused on a North American critical mineral solution, and I know that Rio Tinto is wants to be seen to be achieving total ore body effectiveness, but also collaboration with the U.S. government in resolving the challenges with critical mineral supply. So I mean, our obviously the focus is on North America, and we do want to see this get resolved and get back to the original plan. But we'll know a lot more in what direction we're heading when these tariffs are announced tomorrow.
How concerned? There's also this. Trump keeps talking about the potential 25% tariff on the auto industry. That's in addition to what's already been instituted. How concerning is this especially, I guess, for Killian and Robin, who are in the critical mineral space? Like how concerning is this if this doesn't push through? There are reports that said he might not go through with it. So, what are your thoughts on this?
You want to go first, Killian, or
yeah? Look, I mean, I think ultimately it doesn't make a difference. let's think about long term here, right? What is he actually trying to do? If you look at some of the policies that he's enacting, he's trying to force the American consumer and the American car manufacturer to try to stick to gas engine, setting aside Tesla for now. The largest electric car manufacturer in the world is Chinese, right? It's BYD. So ultimately, these policies, do they affect BYD as the number one player in the, electric car market? No, it does not. So I don't really see an impact outside of North America. As individuals, sure, will be impacted. But at a global level, I mean, research is still being poured into it. Cars are still being built predominantly out of North America. Electric cars are still extremely popular. It's noise. I think it's just a lot of noise. And companies that are in the critical mineral space, it has really no impact to them. It's terrible for Detroit, but ultimately for, the entire industry, I don't think it makes that much of a difference for all of us.
I again just point out that I believe these tariffs, particularly on the automotive industry, would be mutually destructive. The automotive industry cannot retool or build plants in the timeframes that these tariffs are going to be, may or may not be imposed. Clearly, I agree with Killian. The end game for Trump is to force more manufacturing into the United States to improve their economy, but there are parts in the North American car industry that go over the border up to 6-8 times. And if you apply tariffs on those parts, your North American automotive industry is not going to be competitive with anybody else in the world. So it's mutual destruction. And we'll see how this plays out. But I don't believe these tariffs are going to be around for a long time. I actually think that the steel and aluminum tariffs that have been placed on Canada are also not sustainable. The United States just doesn't have the aluminum production that can replace the production coming out of Quebec and British Columbia. And we produce a certain product from our aluminum industry that is essential for that automotive industry. I toured the Rivian factory in Illinois, and it was quite interesting because we don't make cars out of steel anymore. The only steel was actually in the skateboard and the chassis. The panels were all made out of aluminum or carbon composites. Cars are made out of completely different materials than they used to be, and aluminum is essential in that industry. So, anyways, those are my thoughts. We'll see what happens.
But I think the point is that as Killian said, the short term in exploration, I don't really see a lot of impact on some of these things. I think it really depends on where you are. If you're in the auto industry in Ontario, you're going to get hit hard because there's going to be unemployment. There's going to be various things. But does that impact Robin or Killian's company? I doubt it. Right. But as we go into production here shortly this summer, we have to buy side by sides. We have to buy, other equipment. Is that going to impact us? For sure. Right. Our costs are going to go up. So I think it just depends on what stage you're at, within the mining industry. And by far, majority of our explorers. So I don't think that we're going to see that much impact certainly not in the short to medium term from what I see.
Actually, on procurement, you're effectively being forced to buy your equipment from other countries if it's going to be impacted by tariffs, which is also counterproductive to what Trump's trying to accomplish.
Great. I want to turn our conversation now to investors, the capital markets, and investor confidence. So, as you've, it's been on the news, the stock market has been volatile due to these uncertainties that are brought about by tariffs and these counter tariffs, and indications are it's not done yet. This drama is still ongoing. Analysts are even lowering their year-end targets for the S&P 500. How have maybe you can talk about how these tariffs have impacted investor confidence? What are you seeing in terms of your investors, and has it made it more challenging to secure financing for exploration projects or for financing for building your mines? Like, what are your thoughts on this? Um,
Well, from my perspective, I mean, this is causing even more volatility. So for gold, it's great for gold. As you can see here, we're hitting new records, almost weekly here for the last little bit. So and same thing with I can, Killian and Robin can speak more to this, but I mean, from what I'm seeing, same thing's happening, for the rare earths. I mean, the interest, I think, is strong. So I'm certainly seeing more capital, inflow, more coming in, high interest levels because of all this uncertainty is driving, the underlying costs up of all these commodities. So that can only be good, for our business, I believe.
Yeah, look, I mean, you mentioned there lowering targets to S&P 500. The American is predominantly a service-based economy, as opposed to one that is based around raw commodities or manufacturing, which is going to be closer to Canada in general, although we are still very much a service industry. At the end of the day, to Rana's point, I mean, if you're in a high price commodity environment, it's beneficial to Canadian the Canadian mining industry, right? It opens up the door to many other conversations that historically wouldn't have happened. Now, people in Germany start to wonder, well, where are my raw commodities coming from, right? How am I going to supply itself? We've seen Volkswagen, sign deals with, all the way to the top of the upstream production profile there when they signed a deal with Patriot. So that's something that you wouldn't have seen before. And everyone is scrambling to make sure that they have access to capital. And so overall, at a high level, Canada does benefit from that to a certain extent. We do have a fair amount of raw commodities, and we do have something that we can offer to other countries, other nations, other super nations. And, there are benefits we can pull out of that. So, I think that the mining industry as a whole, as almost a perverse reaction to all this, we do benefit. We do have certain advantages that we can showcase and attract new capital that, frankly, people weren't talking about where the materials were coming from 2 months ago. Americans didn't bother knowing that aluminum, to Robin's point, came from Quebec and BC. But now a lot of them do. They have all, come very aware of that fact. So, that's something that allows us to benefit because, again, as Rana pointed out, we became complacent, right? People just assumed that material showed up on your doorstep and you didn't have to do anything about it. Now, forces a beneficial conversation that, where's your commodity coming from? What type of commodity? Is it breaking free? Is it going to avoid tariffs? But I think that's a side conversation to what we're having right now, to be quite honest.
And the regulatory process, right? We're going to benefit from that. It appears as well, right? Because it looks like finally governments are forced to look at to see, cutting down red tape and getting the permitting, hopefully then faster, which is also going to attract capital because you don't want to be known as a jurisdiction that sure you got great projects, but will they ever get permitted? So that's going to attract more capital.
Yeah. To your point, we're actually seeing concrete evidence of governments being actually taking action as opposed to just talking about it, which is good. So, but coming back to the original question, the uncertainty is certainly not good for the capital markets generally. I think investors like confidence, but to Rana's point, we are benefiting from, for example, we talked about the bismuth, the price going from $6 to $37 per pound is driving investor interest. The fact that we have 1.1 million ounces of gold in the ground, that's that to Rana's point, that's going up every single day. We've got $3.4 billion in the ground with that gold resource to mitigate price volatility. the supply chain resilience is only being reinforced by trying to decouple from China. We've seen the impact of when China cut Japan off from rare earth elements over a dispute on the South China Sea. We're now seeing it, our critical mineral supply being weaponized with 8 other technology metals. And I think investors are getting that point. So it helps you attract strategic partners that you've got a potential new source of supply that's vertically integrated, near production, and from a North American source. So while I might say the uncertainty is not great for the environment, it does focus investors in on the companies that can deliver products in a difficult market like we're seeing today.
You've touched on another aspect that I want to talk to you about, and that's government supports. As you mentioned, the BC in particular has already announced that it's fast tracking its critical minerals project. Canada has extended its tax credit, mineral exploration tax credit, for 2 more years, and Prime Minister Carney has announced plans to create a federal one-window approval process for large infrastructure and natural resource projects. How significant are these? And I think, Robin, you've mentioned you're seeing some evidence of these happening. Can you talk a bit more about that? Can you expound on that? What are you seeing in terms of government supports that are already happening?
Well, I might just comment on the flow through aspect initially. The flow through gets renewed every year, so it's a great program for grassroots exploration projects. I might argue that the flow through benefit should be expanded to include projects that are in feasibility, detailed engineering, where we don't really have a lot of support, and I think if we had some kind of tax benefit, we could attract investors to, for financing those kinds of activities. I would like to see the Canadian government have a SOQUEM-like investment vehicle that might be a crown corporation that invests in projects that meet certain policy objectives, whether it be critical mineral supply, whether it be unemployment in a certain region of the country, seeing investment in northern sovereignty projects. I'd like to see more investment in infrastructure. We work up in the Northwest Territories. I'm on the board of the Chamber of Mines up there. We have an acute infrastructure deficit that really does need to be addressed, and I think the best solution would be to invest in corridors for not only access, but also power lines and things that then projects can connect like a hub and spoke into. We have a long history in Canada of being, not only do we have tremendous geological endowment in Canada, we have knowledge and we have a history of successful operations, and we have ESG standards that are aligned with what companies are looking for. A company like Apple doesn't want to see, child labor being associated with the materials that they're procuring from let's say the Congo. So having North American ESG standards and values associated with your production is very strong. But to your point, I think the Canadian government is invested $3.8 billion towards critical minerals collaboration with the United States. We have collaboration agreements with Europe, Japan, other countries as well. And we're seeing investments actually being put into mining to replace the investments that would normally come from the capital markets. So there's the best example I can give you. We've received $17.5 million from the U.S., Canadian, and Alberta Innovates governments, which is filling an important gap. But I'm also seeing it on the regulatory front as Prime Minister Carney has announced trying to get the federal government out of the way of the permitting processes really ought to be at the province level or the territorial level. And having only one regulatory process to permit a project would be really important. But I think the most important issue from government is just to get out of the way, make positive decisions. If you don't have a reason to deny a permit, why are we going through these very cumbersome processes? And I think we're seeing evidence of that in virtually all the jurisdictions in Canada.
I can't help but add, how sad it is that we're having this conversation. I mean, why does it take, this major shakeup from someone like Trump for our governments to start thinking about these things and having innovative programs, Robin, like that you mentioned, maybe for just beyond just exploration for flow through, for example. I think that's very sad. I'm speaking to you here, I'm in Singapore, and I've learned what a fascinating country. They've only been around, from what I understand, in 60 years, have gone from 0 to 100 here. Fascinating. While our governments talk about just recently adding increasing the capital gains tax, they have no capital gains here. They have a flat 15% tax here. They're thriving. They're incredible. How come that we keep getting taxed to death, and how come they keep wanting to increase everything, yet we have no services, to speak of? And yet you have a country like this that within a short, a matter of a few decades is thriving. So, that requires this out of the box thinking, which perhaps is a bit of a positive that Trumpism is creating. But I think it's sad that it takes something like that for our politicians who are so focused on a 4-year cycle, election to election, that they just can't seem to think beyond that. I think that's very sad.
Good point.
Right.
Fair enough.
And both of the leading political parties are singing from the same prayer book right now, which is good to see. So hopefully, whoever wins our election in the next 4 weeks is actually going to tackle some of these problems.
What else do you want to see? Like, Robin, you've outlined some of the things that you want to see. I want to hear maybe Rana and Killian, your thoughts on, in addition to what's been announced, what other things from your perspective do you want to see from the government, especially now that, we're having this election and all the parties are providing their programs, if they become the leader. Rana, maybe I'll start with you as you build your mine. What other supports from the government do you want to see to make your project successful?
Well, I think the regulatory environment has to get better. I mean, it takes the average in 15 years to get a permit, at least in British Columbia. It took us 5, which I still think is, people are congratulating us, and I still thought it took forever. How can you possibly be in a business that takes that long to move forward in? It's very discouraging. So I think that support is extremely important. To be having, they need to dedicate more resources. One of the reasons why I think that it has taken so long is because they just don't have the resources. So that has to be relooked at, and they need to provide that support. So I think regulatory, I think we have to go back to the drawing board here. I think the governments have to look at what have they been doing and what is or isn't working. That's what you would do in a private business, and I think that mentality more is required. From the regulators to see what is needed, and I think more conversations with industry, because then we can give them that feedback. I think that kind of collaboration would go a long ways.
Look, and to reiterate on Rana and Robin's point, we have the classic Lassonde curve for a reason, right? You have excitement during exploration, and then we lose value during development and construction. Why? Because these days, it takes so long. You spend so much time throughout that winter period of, just no value gain, that it is a huge impediment to attracting capital. Right? When we talk about regulatory, that's what we're saying at the same time. Why, as an investor, would I want to put $1 in if I know it's going to be 15 years before I get to see the end of it, and I start to see a bit of cash flow coming out of that asset? 5 years, That's still Rana's point. It's a fast timeline, but it's still much too long. And so when we're left with a Lassonde curve where, we have 1 or 2 years of excitement, but then you tell the investor, well, now you've got 15 years of, going through the valley of shadow of death. Oh my Lord, is that a long time for an investor to want to stick around? And that prevents us from attracting capital and retaining that capital. Investors want to see something happen. And when you're going to tell them, well, look, nothing is going to happen for an extended period of time, it's hard for them to stick around. And I, don't begrudge them from that perspective. So every way we can shorten that window, everything we can do to help companies move smoothly through the process allows junior mining, development, construction company, assets in the construction stage to retain capital and attract capital going forward. It makes for a much healthier mining environment and capital environment for all of us.
And to that point, we spent $145 million and well over 25 years. REA was 7 years in the Northwest Territories, which is far too long. And to the point, time is money. You apply a discounted cash flow model and you put all that money up front and you don't see a return. You effectively, the money that goes into identifying and delineating mineral resources becomes a sunk cost. And to Killian's point, why would you invest if it's going to take that long? Luckily we're coming out of that valley of death and approaching construction. Rana's doing, in construction or procuring equipment is what I'm hearing. So we're coming out of that hole, but it's tough for the mining industry, and we do have to have shorter timelines, or we're not going to have a mining industry.
Great conversation indeed. Maybe let's end as we close our panel discussion. We can probably end with each one of you maybe providing sort of a what's your message to investors given all these things that are happening, the volatility in the market right now. I give each of you maybe 10 seconds to talk to investors. What your message to them? Let's start with you, Rana.
Every market it creates an opportunity, and there's tremendous opportunity here. Gold is at record highs, so they should be looking at companies like ours. The rare earths prices are record highs, and the demand is there, so they should be looking at all aspects of this sector. So I think there's a lot of positive for investors to gain.
Robin?
I would just, it's a great opportunity to be investing in mature projects that are coming out of that difficult period. And to Rana's point, we have high commodity prices, not only for the precious metals like gold, but also for critical minerals. And we have a significant demand for these metals coming from new technologies and the energy transition. So I do believe it's a great opportunity, particularly for mature projects.
And Killian?
Look, for me, it's quite simple. We are seeing a rebalance of world powers. And to Rana's point, it is creating opportunities that we've never seen before. New markets are being formed. And so for a lot of investors, they need to think about how projects, how companies, how commodities fit into these new markets. And so be it critical, be it gold, be it whatever you want to focus on, investors need to be aware of where or how that project is going to be situated in this new economy that is being formed, this new global economy that is being formed, literally right in front of our eyes or right in front of our TV screen, to be quite honest.
Right. Well, thank you again, Robin, Rana, and Killian, for taking the time and sharing your insights. Really a great conversation. Thanks. I appreciate your time.
Thank you.
Thanks for the opportunity.
And thanks everyone for watching. Join us again next time for another edition of CEO Insights.